Welcome to the eCommerce Profitability Show, a podcast by Link My Books. We speak with profitable e-commerce store owners and experts to help your e-commerce business become profitable. Because revenue is vanity, profit is sanity. I'm your host, Dan Little.
Welcome to the e-commerce Profitability Show. Joining us today is Chloe Fallon, the founder and director of Lodestar Accounting and happy customer of Link My Books. Chloe, welcome to the podcast.
Thanks, Daniel.
So, let's jump straight in then. So can you talk me through your background, how you went from maths at UCLan to leading your own accounting firm?
Yes, a bit of a journey. So studied maths at university. Wasn't quite sure what I wanted to do at that time, which is why I went for quite a generic subject in maths. But business had always been something that was really interesting to me. I'd done it at A-level, so it was definitely a focus of mine. So when I came to the end of the maths degree, I chose to go into accountancy and studied to get my professional qualifications. Alongside that, I had a small child, so was juggling the work-life balance, as lots of people tend to do, and having to travel for my job. And then had a second child and needed to just get a bit closer to home. During that time, I worked with a couple of different practices and they each taught me different things about the industry and how we could help businesses. And I'd always wanted to run my own practice or be a director within a practice. And then having two small children, like I say, and tried to juggle everything, I just felt the time was right to take the leap, really, and set up Lodestar. And so, I had a discussion with my husband and we decided that now was the time and Lodestar was born.
Nice. And so there's a meaning behind Lodestar as well, isn't there? You've told me this before. What is it?
I always say to people, I found naming the business harder than naming the kids. Just a bit weird. But I really wanted a name that was linked to guiding. So really looked at words that meant to guide. And obviously Lodestar is another name for the North Star. And the sailors used to use the North Star to guide, or still do probably use the North Star to guide. And that is our aim, is to guide businesses, not just to be that end of year accountant who prepares reports for Companies House and HMRC.
Nice. I think a name for a business is complicated. And I think that it's not just about thinking of a good name. It's also these days about making sure the website's available, making sure you can get the trademark. So there's a million things you have to think about, isn't there? So your guiding principle is that you want to guide businesses. Is that what you had as sort of your unique selling point or mission statement? How did you stand out from the crowd? Because there's lots of accountants out there. How are you attracting the right clientele?
Yeah, I think guiding was, like you say, always the main core value that we had. We wanted to be involved with businesses. We didn't want to just be that one touch point a year. We wanted to have regular touch points and be more of an advisor, I think, around any business problems that they had. We don't want to charge for calls because we want clients to call us and we want them to ask the questions because there aren't any silly questions. We understand It's new for lots of business owners and we just wanted to be there to support them. So that was our aim and our mission, really, was to guide people through that journey.
Yeah. So what sort of questions and challenges are e-commerce businesses specifically coming to you with? What are the typical questions asked when they become a new client?
So we don't work exclusively with e-commerce businesses. So actually, a lot of the queries that come to us with are things that every business owner comes to us with. Cash flow is always the big one. Have I got enough money to run the business? But also, what do they need to do to run the business as well in terms of keeping compliant and making sure that they're dotting their I's and crossing their T's and doing what they need to be doing to ensure the business isn't going to fail within the first kind of 12 months or whatever stage they're at within the business.
So if we take the cash flow one then and explore it a little bit more there, because that is something that we get questioned about a lot as well. So what sort of path would you take that client down? So say I'm coming to you and I'm saying I'm starting my new e-com business. I've got one product now. I'm just wondering, have I got enough cash to expand out and get these two new products as well? What sort of journey do you take them on to work that out?
So I think it starts with the foundations. So we exclusively use Xero as a bookkeeping software. And for us, it's about making sure that that is giving the true picture of where the business is at first. It's very difficult to do cash flow forecasting without having that foundational element working well. So we would start by doing an analysis of what their current situation looks like in terms of bookkeeping and what their figures are looking like within the software. And then we would look to do forecasting as a secondary piece almost. And we would look at short-term, medium term forecasting as well, using different tools that we have to link in with Xero to do that.
And is it always the answer the client wants, do you think?
No. But they need to have that answer, whether it's a good answer or a bad answer, so they can make the right decisions. Because if there is going to be a dip in cash, then they need to be able to put things in place to plug that gap. And having that data as early as possible is the key to making good decisions within the business.
Yeah. And so for things like cash flow, when you come back to them and you say, listen, I think maybe you need to hold off with this, are you then also able to like connect them with, say, for example, finance partners who can then help them maybe bring that cash into the business a bit earlier?
Yeah, I mean, there's different options, aren't there, around getting finance, whether it's debt or equity. And I think it's about that discussion then as to what the goals are for the business owner and what their kind of longer term plan is with the business. Is it something they're looking to grow and exit from in a short period of time? Is it something that's a longer term business for themselves? So it's about working out what the right way is to plug that gap as well. It's not one size fits all really for businesses.
Yeah, I totally understand. And so thinking about, you were saying that you solely use Xero and you need that as a foundation. So are there any other apps or technologies that you use in order to, what's in your tech stack, I suppose is the question.
Yeah. So we try to use tech to solve a problem. It's not a case of us going, oh, we like this shiny new piece of equipment that's there, because there's so many shiny new pieces of equipment that are there at the moment. Fintech is massively growing industry, as you know. But yeah, we use Dext for purchase invoice processing. So that links in and solves the purchase side of things. Link My Books for the sales side of things. And then we have a software called Futurely, which is the cash flow, forecasting, budgeting, reporting app as well. So those are kind of our key bits. And then different businesses will have different inventory management systems, which is kind of the other big area for e-com businesses that link in with Xero. So depending on the type of business they are, we see quite a variety of those. Maybe like Sin7 is a big one that we see.
Yeah. And so if we think back to prior to businesses using all of these apps and integrations and things like that, how much has it changed over the years for you in terms of what does your workload look like for those type of clients?
Yeah, massively different. I've been in the industry 15 years now, and the amount that it's changed from when I joined the accountancy profession to now is unbelievable. I mean, I was still handwriting things out when I joined the accountancy profession for different elements of the work and cross-referencing things with pen and having a paper file. And now it's all remote, it's all virtual, it's all cloud-based. And having that technology just enables us to cut down on the manual side of things, really utilise it to do the processing side so that we can focus more on guiding businesses and helping them to succeed.
Yeah. And so how do you specifically guide businesses towards increased profitability, do you think?
So I think it comes down to understanding what the profitability is in the first place. So things like we mentioned, having that foundational element working well within Xero or whatever bookkeeping system you're using, making sure your inventory is accounted for properly, because that's such a big area of e-com businesses that tends to get overlooked quite often. Inventory management systems aren't cheap, so it's kind of the last thing that e-com businesses like to add into their tech stack.
They love a spreadsheet until then.
Exactly, and then it's finding ways of getting that represented well within Xero to give you a true picture of what that profitability actually is as an overall position. I think a lot of e-com businesses know on a SKU by SKU basis probably what their gross profit is, which is fab. But you also need to have a bigger picture of what's the overall profitability of the business. And then you can look at what your biggest costs are the ways of improving those. Yeah, I think it's having the data to then make those decisions.
Yeah, I like that. I think you can get a bit of analysis paralysis if you look at it too deeply. But I definitely think you do need like a holistic or bird's eye view of where is your business now, and to some extent, like, what does the industry look like as well? Like, I'm going to do a little bit of a plug here. I knew I said I wouldn't. But in Link My Books in the last month, we've added this feature called industry benchmarking, which is basically going to allow businesses to compare their results in terms of growth rate, in terms of return rates, in terms of fee rates, and various other KPIs that we've come up with against other businesses that are like them selling on the same channels. And I think that in itself can help present an opportunity to benchmark your business against the industry and see what are the areas you could be working on that you could be making better because other people are doing them better already, and what is it that they're doing differently. So I think that always having in the back of your mind, like, what are the key parts of your business that you can move the needle on? Because you can't reduce everything. You can't reduce all your fees. But some of your fees you can, like storage fees, for example. So you can look at how much am I getting charged in long-term storage fees and try and reduce those. But anyway, I'm going off on a bit of a waffle here. So obviously, as you can see, I'm just a bit passionate about it as well. So if we bring it back to what you wanted to talk about today, which was the virtual FD side of things, what is a virtual FD for everyone out there who's not 100% certain? And what is it you provide to clients in that role?
Yeah. So I think this service that we offer came about partially from our side, but also from a client asking us, saying, we need this. Do you offer it, or can you offer it to us? And it was a client that was going through a period of growth, but they weren't at a point where they could afford to have an in-house finance director. So someone in-house that purely looked after the finance elements for them. So we filled that gap really, and we made that service offering because we identified with them that, it was a service they needed and a problem that they needed solving. So why not try and put something together for them? So it's really about giving insights and data. Like you say, you can get analysis paralysis. I like that term. But I think it's about bringing people back to the big picture sometimes. As you know, as a business owner, it's easy to get dragged into the detail on a day-to-day basis. And you sometimes need someone to bring you back and think, long-term, what are the goals? What are we doing to get you to that goal A, B, or C? So it's about preparing reports on a monthly basis to give you that data and insight, and then having a discussion around what the report shows. Is it aligned with your goals? And also having kind of interim calls as well to keep you accountable as a business owner, because when you're the owner, sometimes you don't have anyone to answer to. So it's easy to get diverted off path sometimes, and it's good to have someone to bring you back.
I mean, we forget, don't we, about that a lot of these e-commerce businesses are one-man bands, and they can be quite sizable. They can be multi-million-pound businesses, but it's still them, sole founder, and they've got various virtual assistants and agencies doing things for them. But ultimately, it's only them behind the steering wheel. They're the one driving the car. And so they are making all the decisions based on their point of view. So I think that bringing in that financial director role to really look at it from a financial viewpoint with external eyes can really add a lot of value and help them to sort of make those decisions, I guess. Do you see that happening?
Yeah, exactly right. And I think people know that we have clients that we work with as virtual FDs, so they trust our insights as well. I think, like you say, having someone who has seen other businesses, although it's confidential, we gain that knowledge then that we can then advise clients in a better way. As you say, tends to be one-man bands or a couple of, like maybe a husband and wife scenario or partners, and you get one point of view, don't you, within that management team. So having an external advisor definitely seems to help our clients. Things like understanding, and I think this is where your insights section of Link My Books will be really useful for business owners, because it's things like, what I'm spending on digital ads, is that the right level? So a lot of the time, well, the biggest spend that we see within our e-com businesses is digital marketing a lot of the time. And knowing, am I spending at the right level? Am I getting the right return on that is really important, as well as lots of other things.
And it's like you said, actually, because I think that, I know the analysis paralysis thing is coming back, but I think when you're presented with the data and you don't really know what it means, like when they're getting these monthly management accounts from a typical accountancy practice who are just providing them with a cash flow, a profit and loss and a balance sheet, and they don't really understand what those figures mean, it's almost a bit of a pointless exercise in my mind. It's like you need to really be able to sit down with the client and get them to, okay, this is what this means, this section of the profit and loss and the balance sheet. And that's what we can then tailor these decisions that we're going to make with your business. For me, the data is just a way to make better educated decisions. But without understanding what the data means, you can't really make a better educated decision. Would you agree?
Exactly right. Exactly right. It's all well and good having reports, like you say, but understanding them is the key. And what is the point of having a report if you're not going to use it to make a decision? That to us is the whole reason behind having it. It's not something that a business should do. I think maybe it gets different to the point when a business is looking to exit. maybe, and they're thinking about selling, they need to start having those regular reports so they've got that data there for due diligence processes and things. But to run your business, it's about understanding that report and understanding the metrics that are within that. So with the virtual FD role, we look at things like KPIs for businesses. What are your goals? What are the KPIs that we can use to track to make sure you're heading towards the goals that you want to succeed at?
Yeah. But I think even for the businesses that are looking to sell, I've sold 2 e-com businesses myself previously. So I learned quite a lot from that process. And one of the things was the first one did not have accounts in any way, shape or form ready for when it was going to be sold. The second one did. I learned my lesson. But I think that even then, like having the reports there is great for due diligence, but understanding what those numbers mean and understanding what the future opportunities are really allow you to then sell the benefits of the business to the next buyer. To say, look, I know that we are not as strong on this, and what we've thought about doing in the future is X, Y, and Z. That's now given them a playbook on how they can immediately obtain growth in that business. And it's now increased the value in their mind. And so I think that, again, understanding the numbers and understanding what to do with them in terms of decisions is critical for business selling it as well, I think.
Yeah, that's a really good point. Yeah.
So what does it cost to be a virtual FD?
It depends on the size of the business, the complexity, and how often you want to meet, really. So we tend to have a starting price around £1,000 a month or 2 meetings with myself. So that's kind of a starting price, but it can range up from that.
Yeah. But I think something like that it's a return on investment, isn't it? It's like the money that they put into your services and your virtual FD role is going to hopefully pay itself back in dividends in terms of being able to make better decisions, which could drastically improve their profitability. So I think it's just got to be seen just like digital ads, I suppose.
Exactly right. And I think it fits a certain size of business in a certain phase of their life as well. So we wouldn't recommend a startup to have a virtual FD package because it's just too much for them at that point. It's for that client that's on the growth phase that really needs that data to push that growth forward.
Yeah, which brings me very nicely to my next question, actually. So there's a trait amongst new entrepreneurs, a need to do everything by themselves, which obviously is what we're saying the new startups do. But what are the common mistakes that you've seen e-commerce businesses make when they try and do the accounts by themselves?
Good question. This comes down to time and money, doesn't it? It's that age-old weighing up of time or money. And I know, being a business owner myself and going through that initial phase of having to make decisions on what you can afford, it's what can I actually pay someone to do and what do I need to pick up for myself at the moment. So I get that people try and do a lot themselves to start with. But yeah, we've seen a lot of pitfalls with people that have tried to do it themselves. Things like not understanding how you account for inventory is a big one. Not understanding that the money you receive in your bank from your sales channel isn't your sales figure necessarily, that there'll be costs and things deducted from that before it's put into your bank account. So yeah, not putting sales into the right period as well. So just accounting for them as they hit the bank rather than when they actually occurred. There's loads of things that we see clients struggle with. And our advice would always be to get an accountant from the very beginning because we can see the benefit of doing that. I mean, startups fail within, well, a high proportion of them fail within 12 months, don't they? So it's a really high proportion. So if you're waiting until the end of year one to start thinking about an accountant, actually, maybe you're going to fall into that 50%. Whereas if you partner with someone at the very beginning, they can help you with all of these things to give you that data to make those decisions like we keep coming back to. But yeah, I think accounting for inventory, accounting for the sales side of things, not understanding about the accruals concept with accounting, so matching principle, making sure you've got things in the right months. VAT is a big one. So if there are VAT registered businesses, are they accounting for VAT properly based on their sales? So I think those are the key areas probably that we see e-com businesses struggling with.
And so when they make those mistakes, what are the consequences that you see?
They can be large. So if you're making errors on your VAT return, obviously there's consequences there around penalties and having to go back and redo them. We've had clients come to us that we've had to literally unpick everything and start again. So they've spent hours doing it themselves or trying to do it themselves. And then they've come to us and we've said, actually, we're going to have to just wipe the slate clean, and start again and try and unpick all of this. And actually it ends up costing them a lot more to do it that way than it would have done to just start off with a partner that they can trust and give them comfort that things are being done the right way.
Yeah. So key message here to anyone who's listening, who is a new business. We're not just trying to promote that you take on an accountant from the beginning for no reason. It makes a lot of sense. I think, as you said there, Chloe, I think that if you don't do that and you try and fumble your way through for a year, and then you realize that actually you do need an accountant, and then they have to go back and wipe the slate clean or start you a new Xero account, then you've basically wasted all of your time, and now it's going to probably cost you more than it would have if you just partnered with them from the beginning. And then I think even more importantly than that comes back to this, having the data, being able to make good decisions. Without an accountant who's there from the beginning guiding you to make those correct decisions, you're possibly going to do yourself a disservice in your business. You're possibly going to make less money than you could have. And so it just makes sense. So do it.
Yeah.
Simple as. So as e-commerce people, we all know that no one is perfect. So we've definitely made mistakes in our business in the past. Could you share any mistakes that you've made and what have you learned from them in your business?
Yes, we definitely have all made mistakes. I think that's just part of being a business owner, isn't it? You see these things, it's fail, fail, fail until you succeed.
I've seen that graph.
Yeah, it's about making mistakes in the right way. We have overpromised to clients in the past and then realised down the line that things haven't worked out with clients because we were too enthusiastic and probably overpromised, not through anything bad, but just wanting to help more than we probably could have done at the time. So I think that's something that I've learned along the way is make sure that what you are saying you can do is entirely what you can do. And actually, you can only help people so far. I have a big tendency to want to help in every aspect, but we have to kind of identify where our strengths are, I think, and stick to those. But yeah, I think taking on clients at too low value at the start was probably my big mistake. And I think most accountancy practices do that, especially when they set up on their own to start with. It's, yeah, I'll take that client on, and maybe they're not the right fit for you.
Yeah.
So I think that's probably one of my biggest mistakes that I'm learning a lot about.
I hear that with a lot of the accountants that are partnered with Link My Books as well, in terms of after a while you realise that there is the ideal client. There's the client who you will definitely be more profitable as an accountant, but you can also provide a lot more value to as a client. And then there's clients who will sap all of your time and you'll not be very profitable with them at all. And realistically, you can't really provide them with as much value as you would like to be able to, or they would like you to be able to be. I totally agree. I think that it's the same in sort of software as well. Like you definitely have an ideal customer and they fall into a certain price bracket and they tend to be the ones who just come in the door, they sign up for a free trial, they start their account and then you never hear from them. And they're like super profitable, dead easy. They get loads of value from the tool. And then there's ones that come in and they're on the lowest plan and they ask you a billion questions about everything. So I think it is about picking the right persona that you want to target and have your marketing materials towards.
Definitely. And that's something we've been doing a lot of work on over the last kind of 12 months. So thinking about who our ideal clients are and what values they have and what our values are and how they can align and making sure that we work with those sorts of clients. So a lot of purpose-driven businesses and clients that have the same values as us and want to partner with us rather than just someone file their VAT return and never actually communicate with them.
So do you want to expand on that a little bit then? So do you want to maybe tell us a little bit about who your ideal customer is, and anyone who's listening who falls into that can maybe get in touch?
Yeah, definitely. So yeah, entrepreneurs that are time poor but really want to understand their data, e-com businesses and purpose-driven businesses. So we're working with some charities as well who are really open to looking at the figures to be able to guide their decisions. So e-com from any stage of their life cycle, I suppose, really, startups all the way through to the growth and exit and scale phases as well. So we've been working closely with businesses in those phases of their journey.
And in terms of e-commerce, is it across all channels? You work with any channel regardless of where they're selling?
Yeah, so at the moment we've got a mixture of different channels. So people that are selling on just one channel or combination of different channels, and then also people that are just selling in the UK and selling abroad. So a mixture of everyone. It's really for us more about the connection that we have with our clients and making sure we're both on the same page about the values that we have and helping them grow.
Yeah, nice. Okay, so last few questions here. So what advice would you give to an e-commerce business that's just starting out to ensure that they will be profitable and grow at a sustainable rate? And then secondly, how would that advice change to a growing e-commerce business, like someone who has already been doing it for, say, a year or 2 years and is scaling up?
Okay, so first of all, I think we touched on it earlier, is to get your accounts working right. So whether that is you doing it and learning from webinars and things as a business owner to try and get it done properly, that can work if you're in the right sort of frame of mind to do that. Ideally, partner with an accountant early on to get those foundational figures working right so you can assess what the profitability is at each stage of the first kind of 12 months. I think that's key to make sure the data you're making your decisions on is up to date. I think part of the issue with Xero is people expect it to be able to do everything for them without having an accountant. And that's not the case.
I was going to say, does it not?
We see a lot of startups, they come to us and they go, oh, well, I don't need bookkeeping because Xero does all that for me. And I go, no, Xero does do a lot of it, but you still need someone to do the bookkeeping for you. So I think, getting those foundational bits working right to start with is key. And then in the growth phase, it's about analysing more detail around the profitability. So looking at KPIs, looking at margins, looking at your return on ad spend, those sorts of key KPIs for an e-com business, and ensuring that you're maximising each of those to maximise your profitability. We've been talking a lot at Lodestar about marginal gains. Obviously, everyone tends to know what marginal gains are, but it's about if you can tweak each of these things by 1%, actually your overall profitability is going to improve massively. And it's about knowing the data to be able to tweak them by 1%.
We call that compound gains internally, in terms of you make a change now. If it changes it by 1% this month, then next month it's compounded and all the other ones that you add in. So yeah, I'm totally for that. Like, I think people do underestimate how much a big change it can make in 12 months if you make lots of small changes every month, if you just tweak things and optimize all the way along the way. So I think all of this ultimately comes back to having the right data and knowing what to do with it. And I think that that's where I see an accountant who really knows that stuff about e-commerce being a huge asset to every e-commerce business. So happy days. Okay, last question, totally unrelated to everything we've talked about. Imagine you're hosting a cocktail gathering for 3 potential clients who perfectly align with your ideal customer profile. Who would they be? Who would be top of your invitation list?
There's a brand that I have seen a lot of on Instagram that is nothing to do with accountancy, bookkeeping, but I really like their marketing and I think I'd quite like to speak to them and pick their brains a bit. It's called Cereal. So it's a protein cereal and their marketing just really makes me laugh. It's all very open and quite comical. And I think I'd like to understand more about their journey and where they are and what point in their journey they're at the moment. I just saw this morning, actually, they've posted to say thank you. They've hit like 56,000 followers on Instagram, and thanks to so-and-so from Doncaster, because he was the one that tipped the way to the end. Yeah, it's just quite personable. So yeah, definitely the founders of that, I think, would be a good chat. There's also a lady on Instagram. I don't spend all my time on Instagram.
Sounds like you spend a lot of time on Instagram. Do you work at all?
No, I just sit there scrolling. But yeah, so there's another lady on Instagram called Charlotte Courtney, who she works for a marketing company, Develop Digital, and her content's really interesting. It's about the data and the insights for return on ad spend. And I think that's an area I'd quite like to understand more, because it's such a big area for e-com businesses in terms of spend, that if they can optimize that and make sure they're doing that well, then I think it could make such a difference to the business in terms of, return, the cash, profitability, all of it. It all comes down to kind of what are they spending. So yeah, I think I'd like to pick her brains as well.
Are you going to have protein cereal at this cocktail party then?
Well, people might get hungry, might they?
Champagne and cocktail. Champagne and protein cereals, eh?
Yeah, snacks. Inventory, I think, is the other big area of the accounts that I'm interested in, because I think, again, we see that change a lot throughout a business's journey. There's a guy called Matt Flanagan who runs an inventory specialist firm called Blue Hub. And I think I'd probably like to pick his brains a little bit as well.
I've heard his name, actually. Maybe I've seen him on LinkedIn.
Yeah, probably. He does a lot of talks at XeroCon and things like that.
Yeah, that does sound like quite a good little mix of people there. I think you would definitely gain a lot of intelligence from those people. I think that especially the ads side of things, I agree that like e-commerce businesses, the biggest portion of costs is on ads. They're basically trying to promote their services, aren't they? Promote their products. And so if you can optimize that, as we say, even just by like 1 or 2% per month, compound that effect over the year, and you've just found potentially 25 to 50% worth of extra margin there.
Exactly. Straight to the bottom line as well. So
happy days. Right. Well, that's it. I did say that was every question, but there's one more, which is just if anyone wants to get in touch with you about either your virtual FD service or just accountancy questions in general for you, as a sort of like to take them on as a client, where can they get in touch with you best?
Yeah, so I'm on LinkedIn, Chloe Fallon, and then Instagram, obviously, as I've just said, Lodestar Accounting on there.
I didn't even need to ask the question, really, did I?
Yeah, so those two, and then obviously the website as well.
Nice. Well, thank you very much for your time today, Chloe. It's been a pleasure. I'm sure that the audience will agree we've learned a lot today, and I look forward to seeing when this episode comes out.
Thanks for having me, Daniel.
Catch you later.
The e-commerce profitability show is brought to you by Link My Books. To find out more about Link My Books and how to accurately automate your e-commerce bookkeeping to ensure profitable growth, visit linkmybooks.com and then make sure to search for e-commerce profitability in Apple Podcasts, Spotify, and Google Podcasts or anywhere else podcasts are found. Make sure to click subscribe so you don't miss any future episodes. On behalf of the team here at Link My Books, thanks for listening.